Catalina here, coming to you from Loan Sense. I'm here to talk about how we help loan officers originate 2 to 5 more mortgages annually without increased lead spend or ad spend. And we do the lifting for you. So without a ton of extra work on your part. So that's literally, think about it, 2 to 5 mortgages. If you're originating 2 to 3 mortgages a month as an individual loan officer, maybe you're doing a little better than that and you do 24 to 36 a year. 2 to 5 extra is literally 15 to 23% more revenue on average, okay? If we just convert from your current traffic, 2 to 5 more mortgages. And let me tell you how we do this. So Freddie and Fannie guidelines are very generous with helping student loan borrowers. However, what a lot of loan officers do is use 1% of the principal balance as the calculation in the debt to income towards a student loan. So if someone owes $80,000 of debt, or let's say even $40,000, it doesn't matter, and you use $800 or $400 towards that debt to income, and you're a middle income American, like earning around $50,000, that $800 debt going towards the debt to income will make it prohibitive almost to close on a house. So Freddie guidelines that I have pulled up right here will allow consumers to use what's called an income-driven repayment plan to lower the debt-to-income calculation, which is awesome, by the way. However, we're in pause right now, so Loan Sense has the paperwork to help people get out of the pause payment. And Fannie, in fact, allows you to get as low, and I have Fannie guidelines up, as low as $0 counted towards your DTI. Yes, people do actually qualify for $0 payments in good standing and counts towards as if they're actually making a payment, right? And Fannie allows for that $0 to be counted towards the DTI, which is quite incredible. Fannie and Freddie also allow individuals to refinance their mortgage, take cash out because their equity has grown by an average of $17,000 this year, right? And use that money to go directly to the loan servicer to pay down their student loan as long as they're paying off one loan, right? There's some rules around it. But that's also an extra opportunity for you as a lender to give that offer to your customer who has student debt. And it's not a niche problem. 65% of the first-time home buyer market has student debt, and those that may already have taken out a mortgage also have student debt, right? It's pervasive, especially amongst us millennials. So I say this because even the most skilled loan officers we work with, what they tell consumers is, oh, well, they can manage this student loan stuff themselves. They'll just tell them, hey, call up your servicer and ask to be put into IBR. That's what they use, the term IBR. Well, guess what? What even the most skilled lenders don't understand is that, number one, not everybody qualifies for IBR. There is a financial hardship requirement, which means there's an income threshold. There's other income-driven repayment plans that don't have an income threshold, like revised pay-as-you-earn, for example. But if you just tell someone, call up your servicer and get into IDR, well, there is income-driven, there's income-based repayment, there's pay-as-you-earn, revised pay-as-you-earn, income contingency repayment, income sensitivity repayment. Also, a consumer needs to pick these plans based on when they originated, what loan type they originated. So consumers have direct, FFEL, Perkins, consolidated loans, Parent Plus loans, and private loans. So based on what you borrowed and when you borrowed, you qualify for different forms of an income-driven repayment plan. Loan Sense helps consumers figure all that out and file into those plans appropriately so that they are checking the right boxes, filing the right paperwork to get in the right plan to get the lowest monthly payment possible and to make sure they're actually getting the interest subsidies from the government for being on that plan. And that is something where we can add significant value for lenders and share back all the new debt to income calculations for that consumer across all 5 mortgage types and help them close instead of get a denial. And we believe that this is the approach to help every single American, especially those with student loan debt, achieve their dreams of home ownership. We would love to invite you to learn more. Contact us at sales@myloansense.com and would love to tell you more. And of course, take any questions you may have. Good day.